Welcome to the Pump and Dump channel for another weekly update on natural gas and some of the stocks and some of the news relating to how the natural gas price is evolving. So this week we can see the natural gas price was between 215 and 234 for the most part. Last week I had talked about my idea that I thought the natural gas price would go sideways, and that was completely wrong. I did mention that looking at the stock prices, how Range Resources and CNX Resources in particular were priced during the middle of the week when the natural gas price was making this big move up here. I talked about, well, I talked on the weekend about how at that point in time the stock prices reflected a natural gas price which was lower, kind of in the 220s. It's kind of what it comes out to. And with that, of course, if I had assumed that the market knows more than anyone and the market is a forward-looking entity or whatever you want to say about it, then I could have, I could have come to a conclusion that the natural gas price would go lower, and I didn't, because I thought that we would go sideways, and that's, that was wrong. So interesting to note is that, of course, we bottomed in these two stocks last week, and we rallied this week, which is counter to what the natural gas price did last week. It was much higher than it was this week, and that is kind of the thing that is fascinating about the market, I would say, is that sometimes, during some periods of time, the market is looking ahead and pricing in the future, and it gets it completely right. And then at other times, it's just reverting back to fair value. So, getting to some of the news which could justify the natural gas price going lower this week and potentially continuing to go lower. Of course, on the technicals, you could say that this trend line being broken and then going back up against it, we could just continue going down. I think it could be a possibility that we come back into the triangle. That's possible. But at this point in time, there's a good chance that we could stay lower and continue lower. Reasons for that come down to news like this: Chesapeake Energy announcing a pricing of a 1.5 billion term loan. The idea, of course, for them is they're going to borrow this money and then they're going to continue operating a bit longer, and then they're going to manage to recuperate a bit more money by getting some oil and gas out of the ground at profitable profitable margins that allows them to repay a bit more debt than they would if they just folded right now. Antero Resources, they also were in the news talking about reducing their midstream fee expenses with Antero Midstream, and in doing so they're going to sell back some assets, including $100 million of stock in Antero Midstream shares to Antero Midstream itself. Overall, they want to raise 750 to 1 billion, selling assets which will probably include things like acreage. EQT, I also remember in Q3 in their earnings call they talked about how they wanted to monetize some assets. The key thing though is that with what these two companies are doing in particular, talking about them right now, is that they're not really solving the underlying problem. The thing is they're taking off. They're not taking off supply, and if the narrative that there's too much supply is valid, then them extending their life, hoping that the market will recover without taking off supply, is just not going to work. Yeah, that's just it's just not going to work. I think what they're trying to do is they're trying to extend and be the last man standing, hoping that other competitors fold before they do, and then they hope that the market will eventually recover, and then they will then move into with a very high natural gas price, they would move into a situation where they can actually project a positive net present value on their operations. So this is the argument for natural gas price continuing to go lower, is that these companies just don't want to fold. They just don't want to give up. That could lead to these two companies, which are solvent and have a good a fair return at current prices priced in. They, they could see more downside, because if the natural gas price goes down, in terms of projecting future cash flows on CNX Resources, that would drag the valuation down. Of course, not in the near term, because they've hedged so much for the next 2 or 3 years. And Range Resources, I think, have not hedged as much, so they would be more affected in terms of realizing lower earnings from a lower natural gas price, and even if the oil price goes down. So that's the main issue. Then, of course, there's the other issue about oil price. Oil price is very strong at the moment, which has been the stabilizing factor in Range Resources, and why that has done quite well, in my opinion, over the last couple of weeks. The key is, of course, that a lot of oil in the US that is produced is associated with the natural gas. It's like gassy, they're gassy wells is what I think they're referred to as, because if the price of oil is high and strong, then these companies that can produce oil will produce it, and if they have some natural gas where they can get some additional credits, even if it's not necessarily economic for them to produce that natural gas, they'll take that credit, and that will even make the supply side worse. So there is some concern on the fundamentals for natural gas price going lower. But ultimately, yeah, I think what it comes down to is just looking at getting the pricing, the valuation of these stocks correct. And from my observations this week, from Monday through to Thursday into the close, Range Resources and CNX Resources were trading at relatively close to the valuations that I get with the natural gas price and the oil price. With that, with kind of following those two, and then on Friday, the as you can see here, the natural gas price was weaker and it was lower, and oil price, even though oil price was good, it still, with this natural gas price being a bunch lower, it pulled down the valuation of Range Resources, and from an open of it says 466, it rallied to 473, but it was only, in terms of fair value, I think it was at 428, and as a consequence of that, of course, it just folded. Same thing with CNX Resources. I think I had 737 or so at the open as fair value, and it did go down initially, then it rallied back up, and then it came down, and it's closed here at 743. So yeah, going into next week, I think that it depends on what oil and gas do. If they're not good, these two stocks will go down. And if we do see a miraculous rebound, which I think no one's expecting, because in technical sense it makes no sense, the news confirms a lower natural gas price, then we, if it goes up, we could see these stocks moving up again. So that's my thoughts for this week. Remember, that's not investment advice or recommendations for you to buy or not to buy these stocks. If you have any questions, comments and opinions, you can leave them in the comments section, and if you like this content, don't forget to subscribe, and have a good day.